Welcome, Auvorians. Saturday, 28th of November, beginning of the new month next week. Wanted to welcome everyone. I know we got a bunch of new subscribers. So everybody, if you could please, if you're not paying attention to the screen before I get into the disclosure, I want to make sure everybody is looking at the Auvoria Prime official Telegram channel. And let me just open up the Q&A windows in the chat window as well. So let's do a quick sound check. If you could type something in the chat window that you can see my screen, hear me okay. We will conduct all the fun stuff. So VPS update. For those of you that this is new to, this is a big reason why I suggest, subscribing, obviously, first and foremost to the Auvoria Prime official Telegram channel. If you need links to the official Auvoria Prime Telegram channel or my channel or Variable or Gearbox, all the important channels one should subscribe to, in my opinion, just let me know. We can get some of those that are participating in the event with me to post in those channels as well into the chat window. So VPS update, making some changes. Do follow the instructions. I'm really not going to go through a lot of this right now, but just wanted everybody to be aware. All right, let's do some switching over here. Get into the fun part of the presentation. So hope everybody in the U.S. had a good Thanksgiving. We're carrying a little bit into the holidays, so I do get it. There are a lot of people on vacation. Remember, this holiday season globally, the best gift you can give is the ability to share. Share with your up and down line, share the information that we're talking about, and make sure that they watch it too. So let's go into the risk disclosure. Trading the foreign exchange market carries high risk and may not be suitable for all investors. Trading on margin and utilizing leverage can carry an even higher level of risk that can lead to a complete loss of investment funds. So before deciding to trade the foreign exchange markets using any of our software, got some new ones coming out, which is great, or alert products, you should carefully and diligently consider your personal investment objectives, level of experience, or risk tolerance. Most importantly, as I always say, can you afford to lose the money? If you completely freak out and you've lost your entire account and you do need the money, especially to pay bills or even to put food on the table for children, I recommend starting off with the demo first. If you are sharing any of the results from using our software tools, which are really only allowed in our designated Facebook groups, by the way, please do not use the term company recommended settings. AP does not have any recommended settings. We're not a financial advisory firm. We don't have brokerage accounts. We can't recommend brokers. The software, all of our software comes with out-of-the-box settings. You use it at your own risk and discretion. We can customize the settings in some of the software. So we really have nothing to do with soliciting or taking investments, just a company, essentially a licensed software. But most importantly, in my opinion, besides the software, is the educational component that comes with all of this. We've got just a huge onboarding section, just a monumental amount of work that went into that. So that's why I always say, and during the holiday season, give the gift of sharing. So any of my or the developer settings are not company recommended settings. So just remember that, guys. So let's get out of here and go into, just close down PowerPoint here. Switch over. All right, so I'm going to share the Forex screen with you guys first. Let's go into this. So December 29th to December 5th, coming into the last month of the year, last month of Q4, we do have our final non-farm payrolls report in the U.S. on Friday. So do be aware of all of this in terms of anything that's being traded with Canadian and or the U.S. Both of the big numbers will come out this Friday, which should be pretty interesting, actually. So do understand also from a standpoint of news, anytime Our man Jerome Powell, who was the Federal Reserve Chair, testifies. It's always a big event. Do keep in mind that we're looking at this from the perspective of, yeah, there we go. Okay, so you can adjust your time, by the way, by just clicking on this. So I have everything shown here in Pacific time. I do get a lot of questions about this. So in order to filter out, you can just go in and click these boxes if you want to see all the events, but I take them out. I just like to look at the red folder events. I don't really care about any of the other stuff. So I always want to make sure your date's correct for the forward week, especially if you're doing this on Saturday. Time zone, obviously, as well as the news events. So typically towards the end, the first week, I should say, of any year, you have a testifying by Federal Reserve. It's typically in the first week, and you can always click on these events if you want to see what it is, right? And this is this is more of a CARES Act related testifying. So with any time any central banker is in front of the legislative body, okay, there is always the opportunity for comments to come out. In many cases, the comments are prepared. They're usually released to the public as a press release before. But a lot of times when it's Q&A, as I brought it many times before, it can add an additional level of risk into the discussion. So I would probably suggest, if on Monday, if you're running a more automated version of the software than some of the U.S. residents that run what they call NAV version, essentially we have to accept the trades; they don't automatically go off. You might want to just take a close look at this. I do understand that some software will run through all news. I get it. But for those looking to maybe sort of step aside in manual trading, do know these events could pose some risk to some chart patterns not working out quite like the systems would want them to, right? So that's all I'm going to say on that. So let's take a look at the numbers. Start off first, as we always do with S&P. I always wanted you guys to be in a mode, if you will, of looking at the equity markets first. You can always take a look at the DAX if you're European, or some of the basic bourses inside the UK, but I choose to look at the S&P first. Want to see that obviously we're breaking out to new highs, as we're almost in that range at this point. Conversely, look at what happened to the dollar last week. So note that the area that has held support for a huge chunk of time, almost 4 months, has finally broken. Now, what happens below this is almost more important than peaking or dipping a toe, if you will, below this line. So do we have a huge run against stops? Keep in mind, if you go back to the weekly chart, we're all the way back into April of 18 was the last time we saw this level on the dollar. And as if I've been pontificating and prognosticating and mostly just droning on about the dollar's level, we expect it to break lower. So what does this mean? It means that every currency attached to the dollar in some form, or what I like to call pin action in other currencies, has a tendency to rise. Okay, so going back to the daily chart, just taking a look at where the dollar's been over the last year, you can see that we've spent a quality amount of time basing. Anytime you spend a quality or a duration of time into putting a base together, the more solid the base it becomes to either break out from above or to go below and have this area at some point potentially be a now resistance point on any travels back up. So the key to this is I want to see the break below this correspond with a lift in metals, which we really haven't seen, by the way. Metals have pulled back. They've broken through slightly some key support levels on daily and weekly charts. I think that's a head fake, quite frankly. I think the smart money is loading up on or at least slightly increasing allocations in the precious metals area in the portfolios. Um, I think that's the smart move as far as right now. Outside of that, almost all of the developed markets equity indexes are showing signals of way too much bullishness. That's always a negative because if everybody's stampeding towards one area, you can bet that something opposite is going to happen. Okay. But we haven't seen the lift in gold. We have seen the drop in the dollar. So why do I say all this? Because it puts this dip below here in, let's call a suspective, I don't know, is that even a word? A suspective category for me, right? So now I'm already on high alert that this could be a fake out, right? I could be dead wrong and this could just travel further south towards the 85 area, which ultimately I think is the next stop for this currency. Okay. Again, when you're going through any type of forecasting in anything, I don't care if it's artwork, classic cars, currencies, you always want to think about how you can be wrong, right? And if you approach the forecasting, and most of the forecasters out there, they're terrible at it. But if you follow some of the guys I follow on Twitter, especially guys like, I've talked about this, but a lot of the hedge fund guys, they usually are pretty good with, some of their different comments on where the direction's headed, so forth. But just pay attention to the people that run real money, that are quite open with their discussions on market levels. But I just won't want it to be a fake out. So what does this mean if you're trading other currencies? So let's take a look at the GBP. So if you're trading the cable, you can see that there's a potential for this to break out to the upside. Okay. Notice coming up against some resistance at this point. If it does start sailing above this with the dollar really sailing down, it's just going to make, in my opinion, trades that are accepted in front of the freight train, essentially stepping in front of this move, getting short, basically in either Euro USD or GBP USD, right? It's going to be a tougher trade to get any wins out of. Be best to just be long through this period of time, especially if you're taking any type of trade alerts from either Iris or Arrow, which is both our manual trade products. We're going to have a number of calls related to that. We've already had a couple of calls. So for those who want to take a look at those products, they've been doing really well. Yes, it does involve more time. Yes, I would probably suggest learning technical analysis if you do decide to do that. And it can be just as generic as a form as what you see me teaching every Saturday and Tuesday. And actually, if somebody could please, since I haven't had the opportunity, been out of town, somebody put in the chat window if you want, since I can't get any straightness on this. Did Dasan change the times for his developer call? So if you guys could let me know on that front, that would be great, because I haven't heard anything back from him this morning. So that's pretty much all I want to say on GBP. Let's take a look at the euro. This is the main one most people are concerned about, obviously. No surprise, right? See what it's done. It's peaking a little bit above the top resistance areas. Arguably, volumes have been down. So another reason to be suspect on any type of protracted move out of a base area, long or short, is the participation levels. So for instance, next week, as we begin to wrap up at the end of the year, 2020, a year probably a lot of people just want to completely wipe off their memory. I don't blame you. But looking at the volumes is maybe a little bit of a key as to whether or not there's any significant participation up in here, right? I'd be much rather want to be long, at least for the next 1,000 pips, and you can always reevaluate, once we start to get a bit of a lift. If you take a look at a smaller time frame on this, it's one of the few times that I'll advocate drilling down into a 4-hour chart, which is what you're looking at now. Okay. Essentially, this is what they call a 240. 6 times 4 is 240. So starting to see some more participation if we drop down to the hourly chart on this. I have a feeling we're probably going to be running a bunch of stops. Typically, when you get into an area where it's spent a chunk of time basing, which is just nothing more than just zigzagging in these support and resistance points. But once we break above that, there's usually pockets of stops that are going to be run out. And in many cases, especially the U.S. futures markets, those stops could be absolutely vicious moves out of these areas. And sometimes they can be head fakes and fall right back down inside the range as well. So you want to be on lookout for both of those scenarios to play out. USD JPY still in the downtrending range. Okay, you can see me drawn. Haven't paid too much attention to these currencies, honestly. Again, looking at the daily Euro JPY, not as much insight into this, quite frankly, because we're going to need to see the Euro start to lift more against this. But the interesting thing between US and JPY, and they're still both well within their trading ranges that they've been for quite some time. Nothing's broken out there. So there's a lot less clarity from a risk standpoint to provide to you guys, the Auvorians out there, and all of our new subscribers, because of the fact we're still stuck inside the ranges. GBP NZD. Now, as I have warned on many of the previous week's calls, there was a significant chance that this thing could rip down. Okay. So I want you guys to see some of the, let me just switch over to a 1 hour here. Pretty decent velocity off of this drop. That's why you always want to be prepared. So the question you want to ask yourself from a risk standpoint is, if you're manually trading this thing, you're taking alerts, right? And I get if it's just strictly a support and resistance alert, where would you rather be in this wicked trend down, right? You'd rather wait for it to rally back up and then hit the shorts, okay? Versus wait for some move down, not getting much of a retracement, and then it rips down again, right? It's all just about statistical percentages of where your higher win rates would come in any of these patterns. But as I often say, unless you're really, really good at what you do, and this is more applicable to trading equities and futures, there are people out there that fight the freight train. They just do it real quickly, especially when you have some extended move well beyond multiple standard deviations, which just measures the stretch of the rubber band, as I've talked a little bit about in the past. But best from a novice standpoint to just be with the trend. What else do I want to talk about? Gold. Let's drop back to the daily. You always want to look at this if you're trading any of currencies. I think this is a head fake, quite frankly. I don't think this is a movement down. And honestly, we have pretty solid support right in this whole area. The whole 166, if you're trading, this is what you call GLD, which is just basically a proxy. You could trade GDX and or analyze GDX. It's just more of the miners. But there is always clues to be had as far as money supply and risk, risk on or risk off, or VIX. Just looking at indexes like GLD or the VIX. VIX is just a volatility measure. I don't talk much about this, but we're getting into some really low levels. If you go on to a weekly chart, dropping down into anywhere in about the 10 to 15 area is a complacency of investors, in my opinion. As you can see, when everything spiked way up in different pandemics, especially if you go back to the monthly chart, you can see periods of time where risk really spiked in VIX. This is a good time to be short. There's actually a bunch of ETFs out there that allow you to be positioned, in some cases, double long or short or triple this underlying risk and volatility indicator. So there's enough there. Oil, let's go to the daily on that. Again, poked its head above. I think that's just because some of the heated up tensions going on in the Middle East right now, so forth. But the key really being back to the dollar. So I'm going to pause it on screen and take a look at GBP CAD. Let's take a look. That's one of the questions I got. Don't look at this thing much. GBP CAD. So yeah, we're sort of stuck in the myriad of the ranges that have been played out over a long period of time. See that? Not much information to glean other than we're stuck in a range. Take a look at a weekly on this. Almost tells the same tale. Not much to glean from this other than we're stuck in a range, right? You'd have to drop down to like an hourly chart on this thing to see where the ranges are, but not a lot of I offer very few commentary on something that's stuck inside of a range, unless I think it's going to break out. There you go. CAD. Here's a question. Steve, could you please explain to people what options they have with trades they carry over the weekend and the upgrade of the VPSs? Software not managing trades, let it run, set up new VPSs as soon as possible. Drag software to the charts, and then the software will pick up open trades, closed trades, or series of trades that are about to break even or smaller profits. So I have a really extensive piece on this on my Telegram channel. So you guys can go back and go through all that. That may be something that if there's enough interest in this, and there really probably just is by default because we made changes to software updates, obviously trying to get everything smoothed out and get a nice iron out of any really well-performing software, which is the goal. Obviously, everybody's been working really hard at that, which is great. But as I've talked about for probably 2 months now, it takes time to get some of these things ironed out. Do understand that these developers are not teams of people, and in some cases it's one person like Dasan that's working on the software. And as great of a coder as he is, you can only get so much done with releases. So the stability of the software has been fantastic over the last year, just from its stability from a trade perspective, or just doing well, having high win rates with low drawdown, right? But do understand, when you take a piece of software and you deploy it to thousands of people via VPS, that, at least in my opinion, should be upgraded to Amazon Web Services. But that's for another discussion. You do encounter problems. And a lot of times you cannot foretell that. The thing I do like about the teams is we've decided before releases, which I think is a smart move, albeit the issue with deploying it among a group of individuals is I don't think it's a large enough data set to have 50 people in a beta test, because they've already had so a smaller deployment. But I do think it will help weed some problems out. I still think it's just very difficult to foresee any problems until it truly hits mass level, right? Almost like testing it out on a very large scale, a data set of subscribers. So just my opinion, guys. As always, I could be wrong. So other questions. Do you take into account quarterly dollar shifts? But I'll tell you what I should do based upon that question is talk to, which nobody's really had the time to talk to me, because trust me, I've pinged them up left and right, but to put out a piece that basically shows in detail, which I know we've asked software developers to do. And I honestly think it would come better from those guys, having Tyler show you how to make adjustments in Gearbox for existing and open trades, and or Dasan, and have me show you. So, but I will put it at the top of the list, as I've made a note here to try and get that addressed. Next question. Do you take into account dollars quarterly shift, or maybe any other currency? I know Moore's research can send out paid analysis. If you know any good resources, that'd be a blessing. So in regards to analysis, there is actually some really good analysis inside of the TradingView community, guys. So I'm not going to open up the screen right here, but if you go to TradingView, you can go back into the community and actually see some pretty decent research on shifts in the dollar. Okay. But I still think it boils down to just taking a look at the actual chart of the dollar and having that memorized as I have forward and backwards, so that I understand what's going back on. Let me just shift up to that chart. So this is the daily chart of the dollar. For those coming in late, it's breaking lower. All right, so developers are trading this week, Sean. USD CHF. Let's take a look. Another exotic. It is one of the majors, but I don't really trade it. So dollar Swissy. You can see where we are. Notice that this is below the pandemic levels, by the way. It's got to tell you something, right? Really just based on the weakness of you can see how the so let me go back and do one quick comparison here. So Euro USD, okay, lots of strength versus almost the polar opposite here. USD CHF on the weakness. It's really related to the dollar. You probably, I would imagine, the dollar continues lower. Let me see how solid this is on a weekly. Yeah, we're definitely in some new territory. The lowest the thing's been is August 11th, 2011. Yeah, August of 2011. Seemed to me you're probably going to head down to the 86 area as our first line of support. But obviously, this is all based on weakness of the dollar. Take a look at the daily again. Seems to me probably somewhere in the 89.50 area is going to act like a magnet for this. That helps you out. Questions? Anything else I want to address? So let me open up the chat window here. So on the counter scheduled for 1 p.m. on Fridays. Yes, there was a link. So as you guys can see inside the chat window, I'm getting some questions about this VPS. So really all I can do is just echo what Auvoria Prime has put out. But as Mariska shared inside the chat window, it says here the reason for developer calls moving to Thursday and Friday is so everyone has essential information before the deadline to switch software tools, which honestly, I think should be able to be happening on Saturday or Sunday. You know, I don't know what mechanics are involved in that. It's just my opinion. But essentially, you'll have had the chance to listen to, Tyler, I, and Dasan and the other developers coming out. You'll have a chance to listen to all of them before you guys make the decision to switch software. But, as honestly, I think everybody should be working towards, and I mean this with all sincerity, guys, especially from the standpoint of diversification. You really should, once if you're a doubting Thomas, which is fine, the software starts to do really well for you. Make sure you go out and find some people to introduce it to. You may not necessarily want to be an affiliate. I get that, but we'll allow you to get the software. It's for much cheaper or in some cases free if you bring a bunch of people in. And you really have the opportunity to be diversified. So at a minimum, everybody on our team, for the most part, is shooting for to be a silver access pass. Many are already platinum, which allows you to not have to be switching between softwares each week. Look, I get you want to run demos versus go live. We always suggest the demo. Our team is damn near mandated, unless they are a pro trader, to be on demo for at least a month. Okay. And then they could switch the license over to, and again, all of my advice is 100% rooted in risk. That's the key. So remember, even if you're a half-assed manual trader, but you reduce risk down to like bare minimum standards, you could still do well trading, even if you're a rotten trader, because it's not difficult to teach the patterns to trade, right? It, it is difficult to see the patterns, hence why we have some manual trading software that does a really good job at that. But what the difficult part is in any trading is teaching risk management. And a lot of people blow it because they're not paying attention to news events popping up, or their trade size, or their lot size, or just simple things like not understanding how the software works, or just letting it slide. None of this software, as great as some of this stuff has been, none of it is set it and forget it stuff, guys. So if you do that, and the software behaves poorly and or puts a huge dent in or chunk in your account, I got no sympathy for you guys. We're trying. So, because I get a lot of questions around this stuff. Risk. Even my kids are always like, risk, is there risk to not wearing your helmet when you're riding your bike down the street? Yes. So, yeah, no, I get it. I think that should be some way to have this automated, like system can just switch you automatically. Something we can code in, just my note. Silver is going to trade in tandem with gold for the most part. Notice I'm just really not following a lot of silver these days. Let's take a quick look at the chart. So this is the iShares Silver's Trust. Okay. Notice that chart pattern from a daily perspective looks very similar to what's going on in gold, right? It's peeking its head down below a fairly decent base of support. I have a feeling it could be a head fake. Maybe I'm right. Maybe I'm wrong. Maybe I stink at this stuff. All right, let's see what else we got here. Safety change, we give it a deadline to switch now. For the week. Okay. Did Dasan do his call yesterday, Friday, 1 p.m.? Was anybody on Dasan's call? Because he's kind of been a ghost the last couple of days. I know he's deep in getting things straightened out, but was anybody on Dasan's call yesterday? Okay, cool. So now I can bug him to get the notes done because I haven't seen him show up yet. And that's another thing, you guys. I don't put out, here, I'll show you the notes sheet. Let me switch over to that. So I put this sheet out if this is foreign to you guys, and you're not new as a subscriber, shame on you. But I put this sheet out each week. I'm still working on it here. But what I do is I've got, obviously Telegram channels for everybody. But essentially, I take all of Tyler's notes from Gearbox and his calls, and I put them on the sheet. And then I take all of Dasan's stuff, and I put it on the sheet as well. So it looks like I'm going to have to change this picture. I need a new one of these pictures, Mariska. I don't know if anybody's done this, by the way, but this would be good if one of you guys on this call get in touch with tech, have them do a new picture for us so I can drop it in my notes. That'd be great. Very nice. So yeah, I'll put all these notes in, and you guys should be taking a look at this as a cheat sheet for the week. This is what we send out to our teams and they have available. This is in the back office. You can access through AP Live in the Academy. All right, so let's go back. That's funny. So one of my comments to Dasan has been to speed up the call. So hopefully he's working on it. All right. I got my marching orders as far as getting my notes finished. I need the stuff from those guys. Any questions, anything, guys? Notice I have some extra time today. Can't play golf. It's freezing out here. But you got any questions on anything? Remember, my forecast can always be wrong, guys. So always be looking for holes in any of one strategy. That's the key. So you guys, if they have open trades, you obviously have the ability to close them. And if you want the deeper dive on that, you can go into my channel, my Telegram channel. Hopefully, you guys have subscribed to it and go back and see. You can always go into, if there's tons of posts on a Telegram channel, you can always go in and open up and view different things on a channel. And you just want to go back and view any posts. You can actually search through it instead of having to scroll through the whole Telegram channel. So you can do that. But you have the ability with open trades to either keep them running or close them. Depends on where you are. If the trades are in any type of drawdown, I probably would not be stepping in front of the software. And we will get all that worked out. And if you guys want, I can post something on my Market Watch channel in Telegram about that, maybe like a refresher, if you will, on open versus closed trades. I always keep them running if I'm in drawdown because I'm willing to risk further drawdown in order for the system to climb out. Why? Because over time, the vast majority of even some of the worst trades in the springtime when things were just going totally bananas, Forex wise, even some of the worst trades, provided they not hit your stop trigger. We have stop triggers as high as 400 and 500 on some of the live ones we're running, just because we can take the heat. The vast majority of those have come back to either trade flat or be closed out with slight drawdown. All right, so I'm going to end it there. Anybody has any questions and anything, you can always send me an email. Let me just take a look at one thing here. So looks like we're getting some questions on the Telegram channel. Now I'm actually prepared today to post this. So watch this. All right, so here we go to all panelists and attendees. There it is, guys. Ta-da! It is the link to the all-important Market Watch with yours truly. All right, so click on that link, subscribe to the channel, share that link with your entire up and down line. Make sure you find the stragglers out there because I promise you they exist on the teams. They're the type of people that don't answer your text for 4 days, which is an absolute grinder for me. So as I tell my newest clients right up front, the ones that do text, is if I text you, trust me, it's not for useless banter. Please respond back to the text quickly. With that being said, I wish everybody a great weekend. Go drink heavily tonight if that's your thing, or enjoy the rest of the holiday weekend. Any questions on any of this? You guys know how to reach me. Federal, off the mic. May the trades be with you.